Hey guys, and welcome to the Working Money Channel. So there was a bit of a bombshell yesterday. That's right, Chris Larsen and Brad Garlinghouse mentioning that Ripple might actually leave the country. What are the implications of that on XRP hodlers, on the whole plan that they have currently devised for global financial domination? Will it have an impact on them? Guys, I'm going to talk about that a little later on in the video. There are quite a few articles that pertain to that I want to get to. I'm looking at XRP price right now, and it doesn't look like it's been shaken right now, trading at about 24.5 cents. Okay, so this news hasn't actually gotten investors spooked. If I bring up Bitcoin here, we're seeing the same kind of trend. There was a downward trend. This is Bitcoin on the hourly, by the way, before we were looking at XRP on the hourly. We saw a bit of a pullback, and now trying to regain some momentum upward. Bitcoin trading just shy of 10,600. So XRP price hasn't really been shaken by this news. It is just following the market right now. And the spec market, that is still something crypto holders in general can get really excited about. I saw this from Martin Volk. Have you heard that XRP's price, as well as other altcoins, is dependent on Bitcoin? Now, by and large, this makes sense. Bitcoin is the leading indicator. And for those of you who don't have time to really kind of get into the nuts and bolts of it, you buy crypto, you follow Bitcoin, you take a look to see what it's doing, and eventually your alts will go up in price. You know, like we saw back in the summer with the DeFi craze, Bitcoin rose, DeFi coins rose quite a bit alongside with it, but then all other cryptocurrencies rose as well. We saw XRP getting up near the mid-30s, but Martin Volk points this out. It's actually a very detailed article to explain how money flows within the crypto space. Now, I'm not going to read the full article because it is quite long. I am going to read a little bit of it. For those of you guys interested, I will link this article in the description. You have to look at it this way. There's fiat. Fiat goes into Bitcoin. Bitcoin goes into large caps. Then large caps goes into mid caps. And mid caps go into low caps. Then that goes back into Bitcoin or fiat, kind of depending on what the person decides to do at that moment in time. And if that's a little confusing for you, I will try to explain it a little better. So of course we have fiat money, the US dollar, the British pound, or the euro. This is the cash we tend to invest in cryptocurrencies. And because Bitcoin has name recognition, this is usually the first cryptocurrency that anybody tends to invest in. So I think we need to establish that first. Then we have large cap stocks like Ethereum. So during Bitcoin uptrends, investors develop a growing need for a higher return on their cryptocurrency investment, which is why they seek to diversify their funds into altcoins like Ethereum. Ethereum is arguably the most well-known cryptocurrency as an alternative to Bitcoin and is often the next logical choice to building a diversified portfolio. And though a well-established platform by now, Ethereum is still a smaller cryptocurrency by market cap compared to Bitcoin. So theoretically, an investment in Ethereum carries more risk than an investment in Bitcoin would. On the flip side, however, an investment in Ethereum would yield higher returns compared to a Bitcoin investment. And guys, we tend to look at these numbers, right? We tend to look at which coins did better. And so if I bring this up on the daily, I know I've done exercises like this in the past in some of my past videos where you look at the Bitcoin trend and you look at it, you know, even if we take it from, let's take Bitcoin from the beginning of 2017. We'll do the full calendar year of 2017 just to give you guys a sense of what they are talking about in this article. Okay, so if we take Bitcoin from January 1st, 2017, all the way to, let's call it the 31st, which would actually bring us, no, wait, it's over here. It should actually bring us right there. Okay, oops, 31st, give or take. Bitcoin rose about 1,500%. Now, if you look at Ethereum and do the same kind of exercise here, Ethereum on the 1st, which was right around here, all the way to the 31st, okay, which is roughly, it's hard to see because these candlesticks are quite small, but I'm giving you guys just a sense of where I'm going with this. Right there, I think you guys get the gist of what I'm talking about. Ethereum rose 10,700%. Now, when we look at XRP, for that same time frame, where did XRP go? On the 1st of the year, the calendar year here, calendar year on the 1st, we saw XRP. Let me zoom in here to get a better look at that. It's roughly down around here. I mean, this is 0.006 cents, okay, roughly, give or take. Bringing it all the way to the 31st of December brings us all the way to 31st is down around here. Okay, so we're looking at roughly, give or take, 34,000% gains. Now, this is exactly the psychology that gets people interested in these smaller cap cryptos. So the flow goes fiat, Bitcoin, large cap. Then they're suggesting that people will get into mid cap stocks, so ERC tokens that are similar to Ethereum. And then from there, people's appetite just gets so greedy for more gains that this is when they get into the small cap stocks to see even better returns on their investments. Now, you would think that after that, people would just be happy, but no, that's not what happens. What happens after that is, from the low caps, one of the theories is that, and this has been seen, that money goes back into Bitcoin and it refuels that whole cycle over again. And this is how we have seen these Bitcoin rallies go on for longer and longer, okay? Like we did in 2016, 2017. And then by this point here, it was just going parabolic by 2017. What could also happen is that we see money go back into fiat. So once people are realizing, okay, the market is pulling back, I'm taking my money, putting it back into my fiat currency. And at that point, that is when we see the market take a tumble. And so when a lot of people tend to do that, that is when a bear market will occur. And that is what we've been seeing for the last little while. Although we have now been in a bull market for a bit, and this trend is just starting to rock. So I wanted to thank Martin Volk for pointing that out, to give you guys a bit of an outline where we're going with this trend and what we could expect. Let's not forget, Bitcoin did hit its all-time high around mid-December. And if you look at other altcoins, like XRP, once we hit mid-December, there was still quite a ways to move upward. And so this is when a lot of investors were taking their money out of Bitcoin and pumping them into altcoins. And that's when we saw these rallies, which brought XRP, for example, up to its all-time high of over $3, $3.80, give or take. I want to keep moving on though, guys, because there's a lot to cover today. So Ripple ODL corridor between the UK and Thailand has now been established. And this with regards to the recent news, the recent RippleX news. So Top Jurayut, the co-founder and CEO of BitCub, yesterday announced a new payment corridor for RippleNet. In a video shared via Twitter, he explained that the Thai exchange has started transferring money from Thailand to the UK via RippleNet. The transfers take only 30 seconds and the fees are 0.05%, which sounds like the XRP-based ODL payment solution to me. One of the most exciting projects is RippleNet blockchain. This project allows Thai people to remit money from Thailand to the UK within 30 seconds, and the fees are 0.05%, meaning that in the future we can transmit money between England and Thailand in a frictionless manner. Not going to dwell on this too long. I will link this article in the description. I do have a lot to get through. Guys, this from I Am Legion. There is another announcement with regards to MoneyGram. They have now announced that they are extending their contract with Walmart for another 3 years. So this is great news because we know Walmart is practically in every city and town in America. The global peer-to-peer payment and money transfer company has extended its relationship with Walmart through until March 2024. The Texas-based company announced this on Tuesday. The deal means MoneyGram services will continue to be available at more than 4,700 Walmart locations in the US, Puerto Rico, and on its digital platform as well, walmart.moneygram.com. This longer-term extension is a testament to our strong alignment on customer-centric strategies as well as continued preference for the MoneyGram brand at the point of sale, said Alex Holmes, MoneyGram's chairman and CEO, in a statement. And I don't know if you guys remember this. In July, the company reported that its online transaction volume grew 106% year over year during the second quarter as the firm capitalized on a digital transformation that began long before the pandemic. So great news there for MoneyGram and Walmart. Going to continue on, guys. This from Martin Volk. Another one here. The UK has banned the sale of Bitcoin, Ethereum, and XRP derivatives, but only for retail customers. They ultimately say they're harmful for 5 main reasons, okay? First, the regulator stated that the underlying assets do not have a reliable basis to protect their value. Second, the FAC, which is the UK Financial Conduct Authority, by the way, believes that abuse, illegal activities, and financial crime are widespread in the secondary crypto market. In addition, the FAC argues that cryptocurrencies are extremely volatile and that end users do not have a sufficient understanding of the underlying assets. Finally, the FAC claims that investing in derivatives of cryptocurrencies is a harmful investment, and they state this: these features mean retail customers might suffer harm from sudden and unexpected losses if they invest in these products, which includes well-known tokens such as Bitcoin, Ethereum, Ripple, XRP. Specified investments are types of investments which are specified in legislation. Firms that carry out particular types of regulated activity in relation to those investments must be authorized by the FCA. So they also claim that this ban on crypto derivatives will save UK customers around £53 million in a year. In addition to the ban, the FCA FCA has determined to prohibit distribution and marketing of any derivatives to UK customers. Specifically, the FCA mentions the following derivatives: options, futures, contracts for difference, and exchange-traded notes. Now, again, this is just for retail clients. I'm sure the institutional investors will still have those privileges if they live in the United Kingdom. And this may come into force by early 2021, as this article is stating. Very interesting news. I'm wondering if, because there is going to be such a big push for crypto, that the UK kind of wants to get on this with regards to their retail clients, their mom and pops, right? They're everyday people who kind of still might be new to this and might not understand all the ins and outs that go along with cryptocurrencies, the harsh volatility being a major one. So this could be good, especially if this is a sign, it is a signal that the masses eventually will be getting into crypto. There will be a big push for cryptocurrency investing in the UK in the future. So I wanted to thank Martin Volk for pointing me in this direction. And guys, did you hear about this coming out of Japan? That's right, SBI takes over TaoTao exchange that just ditched Binance. Apparently there was a deal on the table with TaoTao and Binance, and TaoTao just walked away. One of Japan's biggest financial companies, the SBI Group, has made a major move in the domestic market, snapping up controlling stake in the TaoTao cryptocurrency exchange from Yahoo Japan. The size of the deal was not disclosed, but TaoTao, previously known as BitArg, prior to Yahoo Japan's involvement, confirmed in a press release that SBI has acquired all of Yahoo Japan operators Z Holdings shares in the exchange, while Japanese media reports are claiming that TaoTao has become an official SBI subsidiary, and we know SBI has a stake in Ripple, so there's a connection there. In the press release, TaoTao explained that it had undergone a change of shareholders with Yahoo Japan shares. The company added that it had also formed a partnership with SBI's SBILM subsidiary, a newly launched branch of the financial giant that is set to use R3 blockchain consortium developed technology to power its foreign exchange trading solutions. And guys, R3 has the ability to settle with XRP. And the news comes in this busy week for both TaoTao and SBI. Earlier this week, the former stated that it had ended talks with Binance on a strategic partnership discussion with TaoTao and Z Holdings, a deal that could have seen Binance return to the Japanese market. But alas, SBI has now acquired them. So I think we're going to start to see a lot more of this, right? We talked about this at the end of 2019, that 2020, well, this was before the pandemic hit. 2020 was going to be that year for acquisitions, and we are still seeing it happen because fundamentally these fintech companies are still on track despite this whole pandemic. You know, the beauty of the tech industry is that a lot of people are computer savvy to begin with, so working from home is almost just like an extension of their office to begin with. So fintech companies still on track. SBI has now overtaken shares for TaoTao, so now they have a vested interest in TaoTao, taking it away from Binance. Binance's deal is now off the table, and so as we know, SBI operates SBI VC Trade. It is another crypto exchange as well as a crypto mining subsidiary named SBI Crypto. It also runs the SBI Ripple Asia blockchain network in conjunction with American crypto giant Ripple. So SBI also forming their partnerships. Of course, the leader at the helm, Yoshitaka Kitao, the CEO of SBI, a big proponent of Ripple and XRP. Great news there coming out of Japan. Guys, I also saw this from Hsbc. So Hsbc tweeted this out. We are excited to announce the world's first global decentralized digital trade finance platform using blockchain technology, and that has gone live this week to coincide with Sibos 2020. Now, I got to give a shout out to Martin Volk and at crypto_ODL, both on Twitter. They both did send this to me, and I don't have their Twitter up right now to show you guys that. Nevertheless, wanted to talk about this because I think this is a huge advancement. So Contour has gone live, making blockchain-based trade finance a reality. This is being tweeted out by Hsbc, okay, another Ripple partner. Blockchain trade finance initiative Contour has now left beta, bringing the decentralized digital trade finance platform into full live production, owned by 8 shareholder banks, Bangkok Bank, BNP Paribas, CTBC, HSBC, ING, Standard Chartered, SEB, and Citi. Contour delivers a global network for trade finance over distributed ledger, which allows parties to transact and view information securely. So Contour started as Voltron, for those of you guys who do not know, a prototype trade financial application built on R3's Corda platform back in mid-2017. Launched a year later at Sibos in Sydney. It then underwent an extensive period of testing by over 80 banks and corporates with trials in 17 countries and transactions spanning commodities, petrochemicals, energy metals, retail goods, and textiles before going into commercial beta as a standalone standalone legal entity at the beginning of the year. So not only do we have the Contour R3 connection to Ripple, we also have these banks here, some of these which I know BNP Paribas, HSBC, Standard Chartered, and I believe ING. They are all partnered with Ripple as well. They are all listed, or some of them are, I think they're all listed officially as Ripple partners. And what are they doing together? Bringing decentralized digital trade finance to the masses, guys. This is awesome news for the financial sector, for being able to trade off a distributed ledger. And chances are these guys are going to be using XRP, considering how many people involved in this are also linked to Ripple. So great news there. I wanted to thank Martin Volk and Crypto Dash on Twitter. Guys, I will link this HSBC tweet in the description if you want to read further. And so it all started with this. Well, I don't know if it really started with this, but I'm going to mention this tweet that Brad Garlinghouse tweeted out. He retweeted Michael Arrington's tweet with regards to Ripple and leaving the United States of America because of the lack of crypto clarity. So Brad tweets out, strongest internet companies built in the US in part because of regulatory clarity. We have that option with blockchain and digital assets. Responsible players like Ripple aren't looking to avoid rules. We just want to operate in a jurisdiction where the rules are clear. And Michael Arrington, of course, down here giving him an amen, brother. Now, what else do we have? This from the Cryptic Poet. And guys, I gotta play you this clip. This is Chris Larsen talking about this exact same thing. I'm sure some of you guys have probably seen this clip, but I want to play you guys this clip just to give you guys some more context.
We've got to give SEC credit. They faced a terrible ICO problem in 2017. It was needed to be stopped. They stopped it, and they should be admired for that. But that war has finished. And now we're in this tech Cold War with China. And instead of pivoting to encouraging U.S. innovation to keep up, they've done the opposite. They gave Bitcoin and Ethereum a pass, proof of work systems. That benefits China, weirdly. But everything else is still in limbo, or worse, kind of being regulated through enforcement. And the message there is blockchain digital currencies are not welcome in the US. If you want to be in this business, you probably should be going somewhere else. And to be honest with you, we're even looking at relocating our headquarters to a much more friendly jurisdiction. You know, lots of them, UK, Switzerland, Singapore, Japan. And that's a shame. So we've got to change up here, or we're going to lose our leadership, stewardship of the global financial system. That would be a tragedy for the US. And I think every US company in this space has to look at relocating, frankly.
Yeah, I want to go back, explore Ripple's operations more in a second, but tell me about this potential relocation. I mean, you know, we've seen the long arm of the US financial enforcement bodies are powerful. They seem to be able to get, punish people anywhere in the world. So would that really deliver you? Would you really be able to escape such regulation? And where would you go? You mentioned London or Singapore. Are those most likely destinations?
Yeah, you're right. I mean, you don't know how it's going to exactly play out, but those centers are trying to be sort of the fintech centers of the world. You have clarity in places like Switzerland, the UK, Singapore, Japan. And by the way, they're all in open arms, right? I mean, just about anywhere you look in the world, given the economic situation, wants jobs, wants future wealth created in their countries. Of course, we still have huge numbers of employees in the US. But I think you have to look at, who is going to be your chief regulator. The thing that's interesting about some of those locations is you have this advantage of having the capital markets, the regulators, and the innovators all in the same city. That actually really helps. This is actually a huge problem in the US when it comes to fintech, because you've got the three key domains in completely different places. They don't interact. They don't understand each other. I think a lot of times in Washington, the regulators look down, for example, on folks in Silicon Valley. They just don't get it, don't want to get it. That's a problem. So, again, my hope is that the US gets back on track. But it's pretty late in the game. We're falling way behind.
He ends that off by saying it's pretty late in the game and we're falling way behind. So, will this happen? What is Ripple going to do? If they leave, will this have an effect on the US fintech industry? Because what he's saying too is, I urge all cryptocurrency companies to leave the United States. We can't do business here if there just isn't the clarity. Will it destabilize all the work that they've done surrounding XRP? Well, I don't think so. Here's an article just kind of going over some of the things that Chris Larsen was talking about. He points to locales in Europe and Asia looking to become fintech centers of the world. So he says, Ripple could possibly move to London, Switzerland, Singapore, or Japan. And of course, these countries, I'm sure, would welcome Ripple with open arms. Obviously, if you are generating revenue in said country, they are definitely going to be very, very open to that. Moreover, those jurisdictions, he says, you have the advantage of happening in capital markets. The regulators and the innovators are in the same city. That's not the case in the US, where there's New York investors, Washington lawmakers, and Silicon Valley tech entrepreneurs. They just don't understand each other. So ultimately, what's going on here is, there is clarity around Bitcoin and clarity around Ethereum. And Chris Larsen has said, weirdly enough, the U.S. has provided that clarity, and that is benefiting China. He's also gone on the record as saying that Ripple, or rather the United States of America, is in an arms race with China, trying to get fintech adoption off the ground first. Who can do it first? And these regulations, or rather lack of regulations, lack of regulatory clarity, is hindering companies like Ripple to take charge in the United States and to really fly with their technology. So this can't be good for the fintech industry in the United States. Clearly, Chris Larsen has said it, Brad Garlinghouse has said it, and they are threatening to move away from the United States of America to a country that is more cryptocurrency friendly. Now, we thought this was all going to change over the course of the year. We thought that these regulations were going to be pounded out sooner rather than later. I mean, we knew the United States have been dragging their heels, but we thought, okay, somebody's got to open their eyes and realize that this is the future. Somebody's got to say, we just got to clear this up so that these guys can continue doing business and so that we can get on with the show. It's important to know Chris Larsen mentioning China, because we do have China as a significant threat, and it is no secret. This from Martin Volk on Twitter. I'm going to read you a little bit of this. More advancements with China's CBDC. Okay, so they describe the DCEP, the Digital Currency Electronic Payment System, that China is developing here. So while rumors have swirled that the DCEP would be rolled out to the public as early as this year, the People's Bank of China aims to have the currency in use in time for the next Winter Olympics planned in February 2022. That was the official rollout date that we're hearing from the People's Bank of China, of course. If the project succeeds, a digital yuan would eliminate the need for both physical cash and online payment services like PayPal, and another way for China to challenge the US for global dominance. Keep that in mind too, okay? Companies like PayPal will not be needed if this rolls out in China. Keep that in mind. I'm going to get back to that. DCEP is a digital currency backed by the yuan, unlike Bitcoin and other cryptocurrencies, whose values can vary widely based on speculation, making them, in the eyes of most governments, unsuitable for widespread use. DCEP will be as stable as a physical yuan. Like cash, each digital yuan is created, signed, and issued by the PBOC. Okay, so explains how it's going to be used. They talk about the digital wallet and how that'll be like an app on your phone and how it's similar to going to an ATM machine and taking out cash. So then they continue on by saying, with a digital wallet flush with DCEPs, consumers can make contactless, instant payments to anyone else who uses the service, whether at a grocery store or paying back a friend. This could theoretically eliminate the need for third-party digital payment services like WeChat or Alipay, currently very widely used in China. Now, I wanted to bring that up because we don't really use WeChat or Alipay for payments here, but in China they use WeChat and Alipay, and earlier on they mentioned PayPal as being one of those services that could be challenged with the DCEP. And the reason I wanted to bring this up is because the US not getting on with cryptocurrency regulations. Could it be that they are actually, in fact, politicizing cryptocurrency to the detriment of innovation? Think about companies like PayPal. Think about all those other payment companies in the United States that have been developed over the last decade or so, 2 decades in some cases. Okay? Think about, and they're saying it right here in this article, that a lot of these payment companies will just kind of not be necessary if a central bank digital currency exists. Now, could there be silent lobbying on the other side, in other sectors? And I'm not even saying, the CEO of PayPal, because we know PayPal in the US, they've come to realize that they need to adapt to cryptocurrencies. But I'm saying, in general, a silent power lobbying the government to dissuade them from giving clear cryptocurrency regulations. And could this be why, at least in part, why the United States is falling so far behind? A politicized move. That is just a theory I have. By no means is that happening. Of course, my brain just keeps moving with this and thinking, why wouldn't they do it? What are the other reasons? What are the possibilities? And how is this going to affect cryptocurrency trading? Well, maybe not so much trading, but cryptocurrency utility in the United States. Now, there's this as well, taking on the US dollar's dominance. So China, I think that they are purposely trying to figure out a multi-pronged solution to try to get up on top. This article continues to discuss the idea of US dollar dominance. Down here, China may hope to create its own international payment architecture, something comparable to SWIFT, referring to the code that helps financial institutions process transactions, but which would be more centered on digital currencies and denominated not by the US dollar, but by the Chinese digital yuan. So is China also coming up with their own version of SWIFT, bypassing the US dollar? Of course, we know that this has been a theme for them. They want to do this anyway. So if they create a system like SWIFT, they can trade with other countries around the world, not needing the US dollar. And what could this mean for the US dollar dominance? Well, of course, if it is not needed, that would make it a weaker currency. So a lot of things going on here, guys, and Ripple moving, I think, could be the answer. You know, if they want the regulatory clarity, they need to go to a country that is going to accommodate that. And there are a lot of countries that will. Now, it's a double-edged sword. I think for XRP investors, it's not going to matter because Ripple still has a vested interest in the XRP ecosystem. There's not going to be a change there. What will it mean, though, if Ripple has to get up, move shop, and go somewhere new? Now, Chris Larsen does say that there still will be a lot of employees in the United States. And so I saw this as well. Here's the other side of this. Crypto mom Hester Pierce is planning an updated proposal to give cryptocurrency startups a grace period. This from XRP Crypto Wolf. Let me read you a little bit of this. So SEC Commissioner Hester Pierce admits that she is still trying to win over those colleagues in some matters, particularly when it comes to her safe harbor proposal for crypto startups. Unveiled earlier this year, the proposal would provide a 3-year grace period before developers are subject to existing security laws, allowing time for a project to fully form and evolve. So she discusses her safe harbor proposal after taking feedback from colleagues and others in the crypto space. I haven't yet convinced my colleagues to do something like that, she said of the proposal. I'm still hopeful that I will be able to. While Pierce wouldn't specifically speak of her SEC colleagues' opinions on the matter, she noted that one part of the proposal that may see further development is in regards to stronger protections for token purchasers. She said that she's considering how disclosures could play a role in the proposal, or perhaps how technology itself could provide a path of limiting how quickly founders can sell their tokens. So this specifically has to do with another facet of the cryptocurrency industry. Of course, there is a lot going on here. There is the trading of cryptocurrencies. There is utility tokens. There is the issue of how companies like Ripple, who want to be on the leading edge of technology, how are they going to function in a system that doesn't allow them to function? So again, this is a small piece to the puzzle, but the point I'm trying to make is that we have ambassadors in the space like Hester Pierce, people in Congress. We got Brian Brooks, formerly worked at Coinbase. These guys are here to make a difference. These guys are here to change the way the United States government deals with cryptocurrencies. Is it going to be in time to make a change so that companies like Ripple don't leave the country? That is a good question. I don't know what their timeline is. Chris Larsen doesn't mention, if the United States doesn't do this by this time, we are leaving. Of course, he's not going to put a timeline on it. Some people in this tweet thread also mentioning the fact that this could be hindering the potential IPO that Ripple was discussing earlier on this year, or was it last year, late last year or early this year, they were discussing the possibility of an IPO. So the fact that there's no regulatory clarity could also hinder that. And the fact that they were talking about an IPO within the next 12 months at the time when they said it, I don't remember when that was, but I remember their timeline for that was 12 months. My assumption was that they were expecting the regulatory clarity within that 12 months so that they could indeed have their IPO and everything would be honky-dory. Well, that clearly hasn't happened, and now they're talking about leaving the United States. One thing I do know, guys, nothing happens till something moves. This from XRP Yoda. And you remember who said that? That's right, our favorite bear in Morse code. And I think this still rings true, okay? This was my thumbnail that I created when this riddle came out. Nothing happens until something moves. And we need to have the clarity before anything can move at all. Which finally brings me to this, guys. This from Ian Northing at Ian Bins on Twitter. Let's not forget that RippleNet's competitive advantage will come to life at Ripple's Swell conference this year. So the competitive advantage, Will it mean that they will have to move to a different jurisdiction to get that competitive advantage? Or does Ripple have something else up their sleeve that they're gonna wow us with? I wanna hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.